Reinet exiting its long-running position in British American tobacco. The firm's agreed to sell its near 2% holding in BAT to institutional investors for just over £1.2 billion. The transaction will be done through Reinet's indirect subsidiary Reinet Jersey Holdings, and it says the proceeds will be used for its ongoing investment activity. Reinet's share price jumped over 8% following the news. It's closed the session 5.7% in the green. Vodacom's expanding its reach. It signed a deal with French telecom group Orange to create a joint venture. And the aim of that is to build and operate cell phone towers in the Democratic Republic of Congo, where mobile internet penetration is at 32.3%. The operators have pledged to jointly construct up to 2,000 new solar-powered base stations over 6 years using 2G and 4G technologies. The Industrial Development Corporation's new CEO, Mmakgoshi Lekhethe, will take over the role next month. The IDC had announced the appointment in December, but was waiting confirmation of her start date while she finalized engagements with the National Treasury, where she was employed as Deputy Director General in charge of asset and liability management. Motorists are set for more pain at the pumps as big fuel price increases are on the cards for February. The cost for a litre of petrol is set to rise by 75 to just over 80 cents, while diesel will increase by up to 90 cents per litre. This marks the fourth consecutive monthly increase, and according to the Central Energy Fund, it's due to a higher international oil price along with the rand's weakness against the dollar. And government is hopeful that it can boost tourism. The Department of Home Affairs has chosen 65 trusted tour operators who will be able to cut the visa red tape for tourists from China and India. This is expected to boost the number of visitors from those countries. South Africa underperforms badly on attracting tourists from the world's two most populous countries. Chinese tourists currently accounting for just 1.8% of the country's tourism spending, and India just 3.9%. Ostracizing South Africa will hurt the U.S.'s interests in Africa. That's according to scholars from the Center for Strategic and International Studies, who say the relationship between the two countries faces a reconciliation or rapture moment under the Donald Trump presidency. Trump will officially take over the White House next week, and his cabinet is set to be packed with members who have previously called for Washington to review its relationship with Pretoria. That's due to SA's diplomatic ties to Russia and support for Palestine in its war against Israel. Further afield, according to preliminary data from the International Data Corporation, smartphone shipments for Apple and Samsung declined in the fourth quarter globally as they struggle with intense competition from Chinese companies, including Xiaomi. Here's more detail in this package report.
Apple and Samsung saw phone sales fall over the fourth quarter as competition from Chinese rivals grew. That's according to new figures out Monday from data cruncher IDC. It says the period actually saw the global smartphone market rebound strongly after 2 years of decline. But it was Chinese brands reaping the benefits. Xiaomi was the fastest growing, with its shipments jumping over 15%. Others, including Oppo, also made gains. All told, that saw Chinese makers take 56% of the global smartphone market, their highest ever share. Meanwhile, Apple shipments fell 4.1% over the period. The US giant has resorted to rare discounting in a bid to turn things around. This month it has offered reductions of up to almost $70 on some iPhones in China. As for Samsung, its shipments were down 2.7% over the quarter. It's among firms grappling with one big market disappointment, the waning of consumer interest in folding phones. IDC says demand for foldables has fallen despite intensified promotions and marketing. It says makers are now shifting research and development spending away from such devices in response.
And China kicked off its 40-day Spring Festival travel rush today, and authorities expect an increase in travels this year, estimating a record 9 billion domestic trips will be made. Here's more on that.
China's holiday travel rush got into full swing Tuesday. The 40-day Spring Festival saw airports and train stations packed with travellers. After a total 8.4 billion trips last year, authorities predict 2025 will see a record 9 billion domestic journeys. But this year's festival comes with China's economy in the doldrums. It's struggling to recover from years of pandemic lockdowns and a prolonged property slump. All that had some asking if the traditional travel rush could go quiet. At Beijing railway station, travellers were largely optimistic. This man says the mood in his hometown is good, with holiday decorations going up. A student says their hopeful and improving economy will boost their quality of life over the coming year. But officials may not be so sanguine. The government has rolled out a series of stimulus measures in recent months in a bid to boost demand. That includes interest rate cuts and expanded trade-in schemes for consumer goods. Travel demand at least seems to be holding up, with records expected across all modes of transport. Train trips are forecast to hit 510 million, with 90 million plane trips predicted, both being all-time highs.